Hello guys, welcome back to my YouTube channel. So let's talk about currency pair. The basics of forex trading starts with exchange. And for you to know how to exchange a currency, you need to understand what is currency pair. An exchange between two different countries' currency is called currency pair. Let's say I need the dollar and I live in Nigeria, so that means I'll need my local currency or any other currency. I just need a different country's currency to exchange to get the dollar. So using the example here, I have the local naira. For me to get the dollar, I will need someone willing to exchange my naira to give me the dollar. I need the dollar, that's what I need. That combination is called currency pair, and in forex terminology or abbreviation, it is called USD NGN. The first currency is called the base currency. The second currency is called the counter currency or the quote. On a currency pair like Euro USD, the first price is called the bid price or the selling price, while the second price is called the ask price or the buying price. Usually the bid price is higher than the ask price. This difference between the two prices is called spread. The spread is the fee or the commission charged by the brokerage firm for any trade executed with any currency pair. So you want to know the fee for each of these different currency pairs. Depending on which trading platform you're using, whether it is your mobile app through the MT4 or your broker's own trading platform, or you're using your laptop, you will see the currency pair alongside with their price list. The most popular trading platform which many people use is the MT4 or MT5, which shows a list of different currency pairs with their price list, usually called quotation. I made a video showing how to place a trade on MT4 using your mobile phone. You can also check that link below. This is the point where I'll need you to stop, get a book, and start writing. I don't want you to feel overwhelmed. This is not a classroom, but you need a trading journal, a way to review your progress, to see if you are progressing. And that trading journal is going to tell you. Your brain will not remember, but your trading journal will tell you what is working. And the whole essence of trading is to keep repeating what is working and try to stop what you are doing wrong. Most things are our bad habits that cause them, but you want to keep repeating good habits and try having good trading systems. All right, so let's return back to what we're talking about, currency pair. So we have three different categories of currency pairs. You have the major currency pair, you have the minor currency pair, and you have the exotic currency pair. The major currency pairs are always paired against the US dollar. These 7 major currency pairs are the most traded currency pairs in the forex market, with their economies having a major impact on the forex market, and dollar being the most reserved currency in the entire world. These 7 major currency pairs, or 8 countries, what are their forex codes or symbols? Which symbol goes for which country, and what currency does each one use for exchange? Let's start with the most popular country's currency exchange or traded in the world, the US dollar. The symbol USD stands for the United States, their currency, dollar. Then you have Euro, that is EUR, which stands for the European zone and their currency, Euro. Then you have GBP, which stands for Great Britain and their currency, pound. You have AUD, which stands for Australia and their currency, Australian dollar. You have NZD, which stands for New Zealand and their currency, New Zealand dollar, which I call Kiwi for the nickname. Then you have CHF or CHF, which stands for Switzerland France, which is their country's currency. You have CAD, CAD, which stands for Canada and their currency, Canadian dollar. Then you have JPY, which stands for Japanese yen, the country, Japan. And me personally, that is the country's currency I trade the most. Pairing any of these countries' currency symbol against each other gives you a major currency pair. Now let's look at the minor currency pair. The minor currency pair, also known as the cross currency pair. This includes the 7 major currencies with the exception of the US dollar. So let me give you an example of the yen pairs. You have GBP yen, that is GBP JPY, Euro JPY, you have CAD JPY, Aussie JPY, Kiwi, that is NZD JPY, you have Chef JPY. You don't include USD JPY. USD JPY is a major currency pair. Now let's talk about the exotic currency pairs. So this includes one major currency and one emerging market currency. An example of this is the USD against the South African rand, that is USD ZAR, USD ZAR. You have USD against the Russian ruble, so you have USD RUB. You can also have pounds against the South African rand or pounds against the Russian ruble. So it has to be one of the major currency against an emerging market. Not all countries are emerging markets. Do you need to know all the world's currency and their symbols or code? No. You just need to be comfortable with some basic pairs. The aim is to make money, and if you can make money with one, it doesn't matter if you know 10,000. The aim is just to keep repeating what is working. So what I advise, get comfortable with 2 or 3 pairs, narrow it down to one, and just keep getting better at that pair. As long as you can make money from it, you are good to go. So in my next video, I'll be talking about how to place a trade using the MT4 on your mobile phone. Remember to like, subscribe, and share with people who want to learn about Forex. Alright, I'll see you next time.